Now, some of the problems that we find with incomes for sole traders, limited company owners, and also employed people, I wanted to run through some of the things to bear in mind. So if you've got more than one form of income, whether you do a self-employed job and an employed job, some lenders won't take all of that. Most, in fact, will only take 50%. So it's good to speak to a broker in that instance. Bonuses and overtime. A lot of lenders, unless it's guaranteed, will only take 50%. Some, in all instances, will only take 50%. But there are a handful, a number of lenders that will take 100. Limited on the maximum number of jobs you can have. Most will limit you to 2 jobs. But you can see people with 3, 4, 5. And different forms of income from those jobs. You don't want to be limited on that because it's going to limit how much you can borrow. Pension income, loads of lenders will take 100%. It's one that if you do go to the high street, you won't find it necessarily there, but there are quite a few that will do it. Having more than one contract, and I know this because I've just had an offer on this guy. One lender in the whole of the UK will take more than one fixed term contract. When I say fixed term, it has to have a start date and an end date. Ideally, you must have been on it for 6 months. But if you've got 2 contracts in place, because you're an IT consultant and you work for 2 firms at the same time, it is possible. Government benefits, things like working tax credits, child benefit, child maintenance payments from your ex-partner, all can be considered, but not everyone will do it. Rental income, you've got to have at least rented the property for 2 years, otherwise that won't be considered. You do need to have an SA 302, which is the self-employed person's P60, i.e. you're classified as a sole trader. You need to have 2 years worth. Lodgers, one lender in the UK. If you rent rooms to anybody in your house and you're getting an income from that, there is one lender in the UK that will consider it, but it's got to be on an SA 302 and it's got to be for at least 2 years. Allowances, things like large town allowance, car allowances can all be considered, but again, not by everyone. And finally, maternity. Providing there is an intention for you to return to work, they will consider your returning to work pay. So if you were on 20 grand before you went on maternity, you're going back to work on 20 grand, that can be used. They won't take today. They just make sure that during this period of, whilst you might still be on maternity, if you've only just started, that you could afford that mortgage while you're on maternity for that little period at the end. But hopefully that adds some clarity. And say, we just want to make sure that everybody gets the maximum mortgage that they need, the mortgage that they need. We want to make sure that it's affordable, and ultimately that you get the best deal and don't suffer stress when trying to get it. Thanks very much indeed. Any questions, please like, comment and share.